with me Nandita Khemka and my colleague.
Hello there, I'm Yatin Mota.
Yatin, good that it was a blockbuster Friday today after
Fabulous
yesterday's.
Friday.
Fabulous, yes. Friday also you can call it. But yes, reason to cheer, and we are ending the weekend on a good note. Because not only did we recoup yesterday's losses, we are back above that 24,100 mark with a 200-point rally today. But for the week as well, we are up almost 1% on the Nifty. So yes, ending the week on a good note after yesterday's scare, there is reason to rejoice today. So yes, day of rebound. Mid and small cap indices, however, were underperforming today. Small caps, however, did move in tandem with the benchmarks. The mid cap index was largely underperforming. Breadth was firm. Advanced decline ratio was almost at 3:2. If you look at the sectors, the likes of pharma, autos were among the big laggards yesterday, but today made a good comeback. Oil and gas was also among the sectoral gainers today. On the flip side, you had PSU Bank Index that ended lower. Yesterday, remember, PSU Bank Index managed to hold out in a weak market, but today it came under some bit of profit booking, and Realty Pack as well ended the day in the red. For the week, broader markets have done extremely well, Yatin. The small cap index is up 5% for the week, and the Nifty mid cap index is also up 2.5% for the week. And the Nifty Bank Index also, Yatin, has seen a good almost 2% up move for the week. For today, the Nifty Bank Index ended above that 52,000 mark. So that's continuing the traction that we have been witnessing in the Nifty Bank Index in recent times. In terms of individual movers, Airtel, Cipla, Sun Pharma, M&M, Tata Consumer, these were some of the movers. On the flip side, losers were a few today, thankfully, just a handful of them. And the Power Grid, Shriram Finance, Hero MotoCorp, Apollo Hospital, Nestle India, as well as Tech Mahindra. These were some of the laggards. But Yatin, Adani group of stocks continues to do well. Some of the stocks rallied 20% today.
Absolutely, and the Adani Group stocks once again in focus. A sharp bounce back seen in trade today. In fact, we had a whole host of new Adani stocks introduced in the F&O segment. Remember, 45 new stocks have been added in the December series, post which we have a lot of action there. Adani Green and Adani Energy Solutions, these are the two stocks new in F&O, which broke records. On day one of induction in the future and option segment, Adani Energy Solution was up 15%, Adani Green up 22%. So great move coming in there. LIC and Hudco also were the other two F&O additions, saw 5% move coming in. What did not do well in new additions is Poonawalla Finance. Stock was down 8% intraday, settled 5% lower. HFCL down 3%. KPIT Technologies, Oil India also witnessing some bit of profit taking. But yes, the new F&O stocks are clearly under focus when it comes to Nifty 500 movers and shakers.
All right, those were the movers and shakers, but let's get down to some of the stocks that are on our radar. Credit Axis Grameen, this is one MFI stock that was under a fair bit of pressure today, down almost 9% in an otherwise good day of trade. It was, of course, because of a downgrade that has come in from Goldman Sachs, which has downgraded the stock to sell from buy. And target price, mind you, has been slashed by over 60% to 564 from 1426. Of course, the earnings visibility, according to Goldman Sachs, remains clouded amid the kind of asset quality concerns that have emerged, for Credit Axis Grameen. Of course, the entire MFI space has been under pressure. But if you look at the asset quality, for Credit Axis, particularly weak, and Goldman Sachs has also said that the de-rating that the stock has seen is structural in nature. Looking at the asset quality picture between Q4 FY24 to Q2 FY25, the asset quality has worsened significantly. NPAs have surged in excess of 95%. And for Q2 as well, GNPA stood at 2.4% vis-a-vis 1.5% on a quarter-on-quarter basis. It's the pace of decline in the asset quality that has, sprung a negative surprise, according to Goldman Sachs. And they've also said that with the new MFI guidelines, the asset quality deterioration is expected to accelerate here on. So, a very downbeat kind of a report coming in. Outlook also pretty bleak for Credit Axis, and Goldman Sachs has cut EPS estimate by 40 to 51% over FY25 to FY27. It also expects credit costs to go up from here. In FY24, it was somewhere around 4.5%, and it is expected for FY25 to be above 6.5%. So yes, credit costs are expected to go up. And Goldman Sachs has also pointed out that the current valuations do not adequately reflect the underlying stress in the portfolio. Even the assets under management had declined by almost 6% in the period from Q4 FY24 to Q2 FY25. Stock is down over 40% on a YTD basis. The entire MFI space has been reeling under pressure, and even banks which have exposure to MFI have seen pain in their
Correct.
earnings. But just a few minutes before market close, there was some bit of news with respect to credit taxes raising some funds. 25 million euros raised from German Investment Corporation and 170 crore rupees from Citi through a co-financing facility. But the stock, extreme pressure today, 9%, and it didn't even make any kind of attempt at a recovery.
In fact, Nandita, the target of Goldman Sachs from yesterday's close almost half, right? They're expecting the stock to be half, 10% downtick today, but a steep downtick. In fact, Goldman Sachs has cut the earnings estimate by more than 40% for the financial years coming forward. So I think the pain in the asset quality, especially in the MFI business, is something that the street is expecting should be quite steep, especially for the next 2 financial years.
That's true, Yatin. And what about you? What stock do you have for us?
So, Reliance Industries, that is one stock which is on my radar. And if you look at Morgan Stanley today, they have a buy call on Reliance Industries, 081, with a target of 1662. Obviously, a standard disclaimer that Moneycontrol is owned and controlled by, the Independent Media Trust, which is the part of Reliance Industries. But if you talk about RIL, most of the brokerages have a buy call. The kind of correction that we have seen in the stock is unprecedented. And probably from here on, brokerages look at it from a value buy, especially in the large cap space, whether they're expecting a decent upside. Morgan Stanley goes on to say that the helium, stake acquisition, which Reliance Industries has done, indicates that the company is looking to expand its footprint, not only in the artificial intelligence space, but also in the low carbon solution, supply chain. Yes, if you talk about Reliance Industries, it has been diversifying away from its traditional oil and gas business to retail, telecom, and now they are, all set to start their gigafactory, which is, manufacturing of the solar ecosystem, the solar power ecosystem. Not only that, artificial intelligence is something which is a focal point for the entire group, and something on that front is, shortly going to, come in with these announcements that are expected by the brokerages. So Reliance Industries, on the basis of valuation, the new energy business, the kind of new ventures that they're doing in AI and other low carbon, ventures, is something that the street will be watching out for.
That's true, Yatin. And brokerages recently have also pointed out that the weakness in the refining vertical may be turning around. And of course, it has seen a couple of challenging quarters when it comes to the refining business, but that may be behind us for now. So, which is what also bodes well. And the stock has been doing well recently. It has been emerging as or among the top contributors to Nifty's gains in recent times, just a week or so. But on that note, I think the other stock that's on my list is Allied Blenders, the bullseye in high spirits. And so is this stock. It is a recent listing, and ICICI Securities has initiated coverage on the stock with a buy rating at a target price of 400 rupees per share, which implies an over 20% upside from yesterday's close price. Now, ICICI Securities believes that the company is well poised to capture the premiumization trend across the alcohol beverage industry. Of course, it is a Maharashtra-based liquor manufacturer. Backed by robust product innovation and strategic expansions, this particular company within the alcohol beverage space is expected to capture the premiumization theme well, and the portfolio enhancements are likely to drive double-digit growth in the prestige and above category, which is spearheaded by products like Iconic White Whiskey. Now, ISEC expects Iconic White Whiskey volumes to double in FY25 on a YY basis. It also expects annual run rate for Iconic White Whiskey at 4 to 5 million cases in the current fiscal. And this category is expected to contribute 55% of revenue in the next 2 years, up from 47% in FY24. Margins are also likely to get a boost from backward integration into extra neutral alcohol manufacturing, premiumization, as well as operating leverage. Now, ICICI Sec projects revenue and EBITDA CAGR of 10% and 30% over FY24 to FY27. But there are certain key risks also that have been pointed out by ICICI Securities, which is a potential ban or regulatory changes in key states.
Correct.
These could be some of the risks. Also, a failure to scale up the prestige and above brands is something that could be seen as a risk going forward. But for now, of course, the stock since listing is up somewhere around 5%, and over the issue price of 281, it has seen 20% uptick, and of course another 20% uptick from yesterday's close price expected by ICICI Sec. So let's see whether or not it manages to scale up its prestige and above brands or not. But for now, the stock was in high spirits today, up somewhere around 4 to 5% or
and
so.
so is Nandita, because today is Friday and she's talking about spirits. So we'll monitor her
No, I'm a
pattern,
teetotaler.
what
But
she does on the weekend.
No, we'll all just relax over the weekend and come back and gear up for another hectic week, given the fact that we also have GDP figures coming out in the evening, later in the evening. And it is expected to slow down a bit, 6-quarter low of 6.5%. That's the expectation. Let's see how things pan out, because of course the urban consumption slowdown theme is expected to play out here, and which is why growth figures are expected to be below 7%. Well, but those were all the stocks that were on our radar this afternoon. With that, we've come to the end of the show. Thanks a lot for tuning in. Have a great weekend and come back and join us again on Monday. I beg your pardon. It's Friday today. But thanks a lot for tuning in. From Yatin and me, goodbye and have a great weekend.